All right. Thanks, guys, for joining. We're gonna get rolling here. So today we're gonna spend some time talking about. Hey, John. I knew we should have started it 20 seconds after. All right. So now we'll get rolling. We have quorum. All right. So what I wanted to do was just kind of talk a little bit about kind of like what's going on here today. So there's actually, sorry, let me check one thing. Yeah, okay. So with the S&P, what's been kind of weird is we haven't really seen any like conviction. I feel like some of the volume was a little bit misrepresented with this one particular ticker. But if you look at something like SPX, you'll notice it's a little bit more normalized, but you can still see like a general decline here where it's been mostly just buying. And this is like your 2-hour charts. It's a little easier to see in the US 500 though. So this is kind of what we were looking at last week. And if you guys remember, we were talking about just like kind of where we're at in this distribution zone here, and not really much has changed. I think what was this Thursday? Yeah, so last Wednesday we were kind of at the top here, and what we were talking about was hold on, there it is. Yeah, so we were just kind of talking about like nothing going on throughout the entire week, and then all of a sudden now we get this this big downdraft like we kind of expected that would happen. Now we're kind of like midway through this pattern. I think it's kind of it's kind of tough to say because there's so many different things or like so many different ways that this thing could break. But I think that we'll probably see a little bit more grind up here. First I'll start with like the bullish scenario. So overall, I think what's happening is that people are a little bit, scared to deploy some capital right now, just because there's so many, so much weirdness going on with like Iran all of a sudden, and big military buildups and all sorts of fun stuff like that. So I think the most important thing to know is that usually that puts a damper on like volatility. Sorry, not volatility. Puts a damper on like just charging bull runs and everybody let's go nuts and buy. But I still think that the bears are making the bulls work for it here if they want to keep climbing this wall of worry. So I think we are kind of like midway through this pattern. I think we might see some more buying potentially overnight here. I also think that like tomorrow we might see some more like just punching slightly higher with the bulls. Overall, I still think that we're like right in the middle of this longer term sort of break of a pattern, and I'm kind of targeting like this 6,700 region, but realistically, let's just measure it. Realistically, it's like, yeah, okay, so 6,700, about that, and that's like your first A equals C sort of level. The next level down here is this 6640 or 6642. So I guess I just did the bear scenario. Damn. Okay, so the bullish part. Sorry, I'm going a little too fast. So the bullish part here is I just want to kind of take a step back and just redraw some of these different connection points that we talked about before. So this is the longer term bullish scenario with this one last sort of charge up. Now I don't really think that that's I think a lot of people are expecting it, but I don't, with all the selling and stuff that's been going on, I think it's certainly an uphill climb for these guys. I know here, let me trying a lot of crap here. Yeah, it's definitely like an uphill climb. So I think the one thing to remember though is like what these kind of like midpoint patterns look like. So up here, what kind of gave me confidence that it was gonna reverse was just the price action. Like reading it throughout the day, like the volume had fallen significantly. We had just ripped up from the bottom, and typically when you see that, you do get a pretty quick retrace. So it didn't happen like within a day, but we did see something like that yesterday, or really like 2 days ago, where we see that big buy up in the morning and then it sells off in the afternoon. That's common for consolidation patterns, but you can still make the case here that there is one last little, ABC that we could squeeze out of here, at least from like a long-term count perspective. Hey, look at that for freehand drawing. Yeah, so I think the natural extension of this is 70.35, and if you look at something like the Nasdaq, it's a lot weaker. It doesn't really give us a good really doesn't give me confidence that this thing's ready to rip to the moon. But yeah, this also doubles here, this extension level. So like if Nasdaq isn't making a new high, like you could make the case here that this is a double top. Get this out of here. Yeah, so you can make the case this is sort of like a double top. It's also called like an Adam and Eve pattern, where just all it means is just like one peak is lower than the other, but it also has the same sort of I guess you could say it's still kind of the same thing as the S&P. It's just a little bit weaker. I'm actually surprised that breadth has stayed up so long. I was kind of thinking it was going to sell off here in a bit, but long story short, you can kind of see that the A=C extension here from the Nasdaq is not as spectacular as one might hope. I do think that like the AI trade now is getting really, really heavy. I think there's a lot of people who are taking profits or just waiting for something, because I'll show stocks here in a minute, but basically I still wanted to give some respect here to the bullish path, because it's still in a gradual uptrend, and I can't deny that. So longer term here, I think what you could see is if this does materialize, I mean, I do think this is sort of a I think this is sort of like midpoint bearish pattern, but longer term you might see like well, let me get some of this out of the way so it's easier to explain. But kind of what I'm thinking is you can see another you see like an ABC here that kind of extends up higher. This is probably, I'd say, like your baseline bullish projection, where we had a low today. So the low today was like right at it was in between kind of the 50% and the 61.8% retracement, at least for this entire move here. So what that means is, it's just not a strong bullish pattern. I think what you might see before we see any sort of like rip up or whatever is you'll probably see another little dip down, maybe to so like if you're planning on buying the dip, so something here like the 68.26 is probably a reasonable level to buy the dip, but that's only really if you see strong volume and really strong support there. But given recent it's kind of out of that value zone too with volume, so it's just not a good environment for longs. Excuse me, let me take a drink here. But it's just not really a good environment for going long and staying long and being confident about it. It's certainly a different environment than it was like a month or two ago. And if you kind of zoom in, these are all the 2 hour time frames, and you can see a lot of these top wicks. And usually when you see these top wicks, that means that it's not necessarily indecision. It's more about like there is a motivated seller out there. I mean, clearly we can see it with the last couple of days here, where you can see these kind of like these balance candles, and just general, like the bulls had a window of opportunity to take break a trend line, but they didn't do it, and they got rejected. So that's another source of angst here for bulls. But if we're kind of looking at this pattern here, you might see another little drop down, maybe like tomorrow morning or something like that, and then you could see another spring up like this. I think at minimum, this could be true for both bull and bear, and I think we see these sort of these consolidation patterns. So let's just assume here that, let's say we don't see it. We don't see the the pullback, like that was it today, and then tomorrow morning we see something like this where it just heads up. The next path is going to be, where does it stop? So now we've got another trend line here, but I still think that this is a little bit outside of the trend line, or I think it's probably a stretch at this time, unless you get a really bullish day and a continuation. But I guess if you're looking at this, you just kind of want to measure your move here. And you did see a rejection here, like right at this 0.618 yesterday. That 6909 level I called out yesterday. And if you have this, this like ABC kind of thing charge back up, I'd say probably the maximum would be this like 786 level. And that's also Tuesday of next week. So, if we get some action over the weekend where, we get some or kinetic action or whatever the military people say over the weekend, this is not a guarantee. I think this is probably going to be the best case scenario here for any sort of retrace to like exit any trap longs or any of that stuff. Because in my opinion, when you see these big sort of sells, these are motivated sellers. Like now they're defending a level, and that level, in my opinion, is right here around this like 6930 level. You can also see this point of control right around here too, which is really close to this 0.618. So all this to say that there is resistance above, and it's accumulating resistance. So you want to be careful if you're just planning on going long and going out to cut the grass. I don't think it's going to be that easy anymore. So if we do see a continuation here, like I was modeling out before, like if we do see some sort of longer term move up here and we make a new high, I wouldn't say it would surprise me, just because it depends. Like if there's a catalyst or something that says like, let's say Trump makes a tweet or something that says like everything's free for the next 6 months or whatever, I wouldn't put it past them. But I'm sure the market would shoot up, and then the next day it's like, no, I was just kidding. Nothing's actually free. They're just going to cost you 20% more, and then the next day it's it's a pump and dump scheme. It happens, but so I guess like the easiest way to plan for this is you can just treat it like this bifurcation. So you can say anything above this like 6909 level or 6910, whatever. Anything above this level is bullish. Anything below is bearish. So if you see a continuation here, and you'll also have to be careful too, because you don't want to go long like mid pattern here in the last wave up before you get any sort of like pullback. I'm already starting to see stories about like pullback is near in the markets, and this is what the market has done the last those stupid little headlines you see every once in a while. But usually those headlines are reactionary. But with people that I follow like on X or whatever who have these really good charts, like longer term, like here's what happens when the Shiller PE is extended. Here's what happens here. Like that's the kind of stuff I pay attention to. Not necessarily like what they say on CSNBC. They're always reactionary. They're always blaming whatever happened in the stock market that day on whatever they feel like is an excuse, when they really have no idea. So anyways, because if you think about it, like it's not sexy to say that, well, there was just a lot of 0 DTE options gamma that was, I'll put heavy. Like that's not cool. Nobody likes that on TV. So, all right. So to kind of put a pin in here, put a pin in like the bullish case here. I would say, yeah, that's your bifurcation level here. And if you look at something like the Nasdaq, anything really above the last high, I'd say is so like this 375. I think this is a reasonable bullish sort of short throw here that you could get up probably another like 200 points. It would still be, again, it's like there's other trades you can make that get more return than going long in the indexes now. They're getting so tired and wore out that there's not that much juice to squeeze. So any questions about the bullish scenarios? All right, so now we'll talk bearish real quick. So bearish, this is where I think our risk is getting a little elevated, that we're going to have some sort of trend line break in a meaningful way. That's just because, again, like the price action, you can see all those top wicks. Everything's getting sold into. The bulls are trying to either cover for accumulated positions, like so down here, right? Like that was a good place to launch it because that was well below any other accumulation place they had. So if you're gonna increase cost basis and deploy more capital, that's the place to do it. But also too, like you get these You get these people that like to buy these patterns, like these inverted head and shoulders, and it works. I mean, the symmetry's there, and it could work out. We just went over the bullish scenario, but there's a lot of hurdles to clear now. So I guess it's sort of like we got to look for a catalyst. We have to look for some sort of it can come in the form of a tweet. You guys know this, or it can come in the form of something else. But we need to have some sort of kick to the next level here, whether it's going to be something positive where hey, everything's going great now, like look at this data point, but then there's always that skepticism too. So like now we're kind of getting now we're getting into the separate the men from the boys sort of thing. I know it's the second analogy, I guess. I don't know if I got that right, but it's where you separate the people that just blindly trade and go long, or the people that actually have a strategy behind their investing where they want to preserve their capital. And as you guys know, preservation of capital is paramount. It's number one. You cannot skip on that. So it's risk management, preservation of capital, and if you have underwater positions, manage that risk as well, especially if they're like long positions. So like single stocks, I think like certain single stocks are really beat up. We talked about some of that last week. Like if you look at like Kraft Heinz or like Campbell Soup, or like something like that, where the sector itself is depressed, and a lot of those shares are trading under like book value. That's really important, because if you want to look for alpha someplace, you're not really going to find it in like let's say something like, okay, so like XLF, like financials. Like financial hasn't been topping for a year. It's been doing the same thing as equities. It's just been kind of grinding along. You're not really going to find a lot of return there. Also like something like, sorry, did I say XLF or financials? Hold on. Yeah. So like you're not going to see a lot of return here. You might be able to squeeze a little bit of room at the top here, but something like utilities has all been kind of bought back up again. Energy is there you go. So when people talk about sector rotation and stuff like, oh, we're going to small caps, you're just taking one overpriced crappy stock and switching it for another overpriced, sorry, not stock, index, crappy overpriced index for another. And this is the same thing here with some of these different sectors. But the cool thing about the sectors, and biotech, that's a nice wave 3. Jeez. So some of these indexes here, like they're all just bananas, crazy. And this is actually been I think why you see a lot of the market breadth that's not really declining. I mean, consumer staples, right? Consumer staples was what a lot of those stocks, like let's say Campbell's and like Kraft Heinz and stuff, they're all really associated with. But even that's been extended. I mean, it could still run a little bit more. I mean, as an example, like I could still see a pretty big flag here. So you probably got another little run here. But overall, I guess what I'm trying to say is that there are certain sectors that are really inflated, and the easiest way I think to trade, let's say like when indexes are topping, metals are getting a lot more volatile than they were a couple weeks ago. You start to look for some of these stocks that were market darlings here until they weren't, but there's also really good dips to buy, at least in my opinion. Alex, I know, does not like quantum stocks. He doesn't like them at all. In fact, I talked to him today about it. But my argument is not necessarily you're not buying the CEO. Alex's argument is more central to like a lot of these stocks. They're just they're pitch guys. They're like IonQ, like CEO sells a bunch of shares at the top, and then the stock tanks, and then where is he? But the fact of the matter is, these companies really do have strong technology, next level, next generation technology. And when you have a lot of these companies that are at their sort of, I guess you could say that they're pattern lows. In my opinion, it doesn't matter what kind of stock it is. It's still a pattern low, and you could still make a decent amount of money for it, like if the stock turns around. Now something, a stock kind of like these quantums, I promise I do have a point here. I I guess, you know, when you're looking at a lot of these quantum stocks, I just think that they're going through like an accumulation phase right now with institutions. So you see like a lot of selling at the first peak, and then typically you see like a longer term sort of wave two. And yeah, it could sink a little bit more here, but I think that, you know, the technology and stuff that they have to offer over time, it's definitely going to get a retrace back up. So I think, you know, like stocks like that, a stock that has, or like stocks that have these depressed charts. Yeah, my charts are all messed up here. What's going on? What'd you do, Ben?
Huh.
Yeah, so think about it like this, guys. Like, just at first glance, okay, RGTI, look at all this buy delta down here at like the 15s and the 16s. Like, you can't tell me that institutions aren't buying up all these shares right now at cheap prices. Even if it sinks a little bit lower to your point of control, like $12 a share or something like that, you know, RGTI still has government backing. It's you know, it's next level technology. And I mean, you could still trade like, you know, quantum index or something, but you're still not going to get the returns of like one stock that goes to the moon. Like, you know, my wife had an awesome trade in QBTS this year. I mean, you know, we had a couple good ones too, but you know, some of these are looking like some pretty easy to spot ABCs, or these like ABC corrective pullbacks. So also, you know, stocks like the income plays, right? So like you know, the PSEC stock that I've got a boatload of here, it's still a dividend monster. You know, it pays really well over the course of a year. So you know, every month it pays something. You know, if you look at something like ConAgra, it's jumping up off the floor. It's, you know, it's kind of running into its 200 daily moving average, but you're starting to see some of these more like consumer staple companies that you know, are actually, you know, lifting up off the ground. You're starting to see a little bit more buying here. But if you look also too, like there's a lot of them that have dividends. So I show you all these because that is a far cry from the lofty, you know, the lofty indexes. And I always like to kind of zoom out here and give perspective of like how far it's come, and how crazy, you know, stuff like this can actually get. So I mean, like, we all know it's a bubble, but it doesn't necessarily mean it's going to end tomorrow. You know, the mistake is the mistake is always trying to call it. So, or trying to call a top, and then you're just left looking stupid, myself included, many times. So I just wanted to show you guys, like, as an example, there's a lot of stocks and stuff that I've added to the portfolio recently, and also as another example, like MP. You know, thank you, thanks Don for that. Oh, let me go in this one where I got it started. Just as an example, like a lot of these stocks, I think are you know, ready for some sort of like upward movement. So, you know, it could take some time, of course, but you know, they're like these consolidation patterns and stuff. This is a pretty clear like bull sort of pennant to me, or flag or whatever. So I mean, it could head up to like 82, but to try to stay on track here, what I'm trying to say is that, you know, there's not much like juice left to squeeze here with the indexes, but there are a lot of opportunities in other places. And that's why I'm trying to focus more on like single stocks and you know, like, let's say selling puts and like consumer staples. Like, you could do that all day long, and you know, just rake in the cash. And like, it's okay. Let me just do an example here. So let's say, you know, everybody gives me shit for Campbell's, but here you go. Pardon my French. So you know, it's been depressed for quite some time, and you've got let me turn on my Graham's number. So Graham's number, to reiterate here, is it's book value divided by outstanding shares. Now, this is a very, very quick way to determine whether a stock is trading above that, you know, fair market price, or below it. And typically, when you see stocks like this, like I think Kraft Heinz is maybe below, maybe it's PSEC. It's calculating. Where is it? Oh, Sorry, I'm on the wrong thing. There you go. So, like for example, PSEC itself. There's some articles that are articles out there that like people don't like the stock. I mean, it is what it is. It's a dividend producing machine. It's a company that exists to enrich the lives of those who own it. Like all other companies, right? But it's a dividend stock. It pays a monster dividend, and the assets that they have on their books, if they were liquidated tomorrow, were worth double than what they're trading at today. So if I'm Warren Buffett, what am I looking at? I'm looking at prices that are below their book value, and that's Graham's number. So it's just a really easy way for you guys that, let's say, you're using scanners or something like that. I know TrendSpider has an awesome scanner. They have a couple of like AI bots and stuff you can deploy to do like price triggers and stuff like that. You should check it out. It's awesome. Also, so like some of these stocks too, like Conagra Foods. I mean, there's like 10 companies in the world that create like the lion's share of like canned foods and like durable, long-lasting foods and stuff. And like it's a, in my opinion, excuse me, in my opinion, it's a very like durable sort of sector where I don't actually know why these stocks are beat up, but they are. And you can also notice there's a ton of accumulation going on down here. So in my opinion, it's just, some of these stocks are a steal. Even though it's just my opinion, I can't tell you guys what to do, but comparatively speaking to something like Nvidia, still 16 something percent of US GDP, it's a lot of eggs to put in that one specific basket, and it has a long way to go to the ground if it's going to sell off. So yeah, I guess the main point here is like we should try to look at like other opportunities around the markets instead of like, I mean, it is important to track the indexes, bullish, bearish, that kind of thing, because it does impact all the other sectors. But what I want to do with the service moving forward is I would like to focus a lot more on like single stocks and like selling, like let's say selling puts, yeah, that's it. Sorry, cash secured puts, calls and stuff like that. And for somebody who just wants to do nothing but that, and it's important to understand like if the market is generally bullish or bearish. So if it's generally slightly bullish, kind of like the last couple of weeks, but no, it's actually kind of been a little bearish. But if you want to pick up some shares of something, why not get paid for waiting? So like, I'm sorry, I was going to show this before, but I distracted myself with my own talking again. But like Campbell Soup, for example. I know this is kind of a joke stock to some guys or some people, but again, it's a tradable chart. So if I'm wanting to trade something like this, and let's say you want to sell puts, well, you could sell puts at like 2650, and the odds of the price getting below 2650, well, what's the worst that can happen? You get shares assigned at 2650. Okay, well, even if it declines a little bit more, you'll still probably see some sort of like ending diagonal sort of thing here as it grinds down and then eventually pop up. I mean, so I guess the worst case scenario is you get assigned the shares, but you can also do, you could sell calls against it. So you can collect a lot of premium on both sides while these companies are under accumulation. So I think I'm going to start doing a lot more of that. Like we did some in the summertime, but nobody really knew the quantum stocks were going to take off like that. And some people, like, there was a lot of rolling, and typically there isn't a lot of rolling with covered calls like in boring stocks. So it's just another way to like generate income. And in an environment like this where things are getting a little bit more turbulent, you like if you can replace, let's say, $2,000 a month or something in options income, like that's awesome. I mean, I don't know anybody who dislikes making money. So I guess so what I'm going to try to do though is like I'm going to try to pivot the service, because I think a lot of people are struggling with like the leveraged ETFs, not understanding where to hedge, when to release the hedge, and it's kind of more trouble than it's worth, because I one of the main reasons I started my service was I was part of PAM before, and I was was hearing a lot of stories about people getting destroyed trading futures and just getting accounts wiped out, like $1 million accounts, and that's just makes my heart cry. So so the whole thing was like, okay, how do we prevent that? So okay, so some people got a little bit deep in UVIX. A lot of people I think are trying to get out of that, but that's just an example of we're like just focusing on too many like leverage things. So I think maybe being a little more conservative and then focusing on like generating income while we're waiting for charts and stuff to turn around or pivot. I think that'd be a good opportunity to show people what is a lower risk way to do things, but then also generate some like replacement income on the sides. I think it's also an attractive strategy if you're, let's say you're retired or close to retiring. You don't want to be gambling with like shorts or like leverage longs and not really paying attention to it. Like if you're in those leverage funds, you have to pay attention to it like all day. And I think I'm going to try to focus more on like people that like work for a living, just because it's a lot easier to like publish levels and say like, okay, overall guys, like bullish or bearish, like here's your bear targets, your bull targets, and I think that'll be a little bit more effective for people. But yeah, so hopefully that makes sense. But I'm kind of covering a lot of different topics all at once. But I guess I just kind of wanted to show some of the opportunities there with some of these other stocks that they've picked up, and some of them too, like I think like Roblox, for example, is that one actually took kind of a plunge here, but I still think it is a strong cash cow. So it's just like again, it's the same situation as some of these other stocks. It's been beat up for a long time. You're starting to see a lot more volume. That's accumulation. If you see volume higher up, then that's distribution. There can be some accumulation, or a reaccumulation at higher levels, but it's typically rare. Typically only with like wave 2 pullbacks or like B waves or something like that. So some of these stocks that might be down, let's say like 10% or something, from when there's like an original entry, you could sell calls against it to recover some of that. You could that's why you kind of ease in, right? Like you could sell puts against it to pick up shares lower, increase your cost basis, make some money while you wait. So that's just an example. So that kind of covers, I think. Oh, sorry, nope, not exactly. So for this, just this sort of bearish scenario that I wanted to go through before. I'll wrap up with that, and then I'll move on to like oil and stuff. So the bearish scenario, as we kind of talked about before, if it's going to punch through, it's probably going to be soon. And like that 6710 zone is probably what you'll see here. Short term, probably tomorrow, as the week wraps up here, you'll probably see something like this. I mean, you're already starting to see futures positive after hours here. And that's that's what you'll that's probably what you can expect here. It's like the bears sell all day and then they just disappear. You're like, where'd you all go? It doesn't really matter. It's just kind of how it's done. So like you guys can kind of see it happen throughout the day. We see just a ton of selling and then these guys just buy it up. So this to me does look like some sort of like a midpoint pattern. And then once it reaches a certain area, then it just rolls over. So it's like a midpoint consolidation pattern where there's indecision. And then you have a lot of people that are trying to figure out like, well, is it bullish today? Is it bearish today? I don't really know. That was, today was one of those days. So just kind of sitting around and waiting, was a good choice today. All right. So that's kind of it. I don't want to beat it to death here because there's going to be so much uncertainty. If we do have some sort of Iran action here, so I don't want to go too deep down either path, like uber bull or uber bear, that kind of thing. I think it's just we're kind of in that. Let's take it day by day, and let's figure out what the best plan of attack is for longs or shorts. So any questions with indexes or anything like that? I know I said like 500,000 words in like 3 minutes. So my wife says I talk a lot. I don't believe her. All right. So the Dow. Oh yeah, just one thing I wanted to show in the Dow here. So the Dow hit this 50,000. Now it's getting a bunch of volume, bunch of sell volume. S Dow might not be a bad pickup if you want to like hold it for a while. This one's also got a monster move, and it just hit this 1.618 extension. Yeah, I mean this one to me, it's like, oh, Dow's at 50,000. Okay, I remember when they were pulling out the hats for less than half of that. But I don't know about you guys, but I don't really see any hats or party hooters or anything like that this time around. They always just show the same guy, on CSNBC. Always this guy who's like, he's got his head in his hands. I think they all like they draw straws and they say like, all right, well, Steve, it's your day to act like you've lost your entire family fortune, and then pose for the cameras.
I remember when the Dow hit 1,000.
There you go. 1,000.
I do remember when the Dow 10,000 book came out in like the mid 90s.
Oh wow. Okay.
Yeah, and that was like a really big deal.
Yeah, that's awesome. Yeah, and now hey, 50,000. Yeah, that's fine.
No one even cares.
Yeah, nobody cares. Yeah. I mean, yeah. And what's funny is like in these bubbles, you get like all these different calls for extremes. Like, remember who was calling for Bitcoin to be 1 million or something like that?
A lot of people.
Yeah, right. Yeah. How's that going?
I think Kathy Woods was calling for like 3 million.
Oh God, 3 million?
Kathy Woods, yeah.
Oh, Kathy Woods. All right.
Yeah.
Kathy. Okay. I would say that's a sensational claim.
It's speculative. Yes.
It's speculative. Yes. One would say an unprecedented speculative claim.
The question is what 3 million will be worth when that happens.
Yes. Right. That is
That's what no one talks about. Right.
Yeah, that's fair. All right. So one thing that I've been noticing lately, kind of switching gears here to yields, is I think that you're starting to see back before like late January, when the markets were still kind of looking generally bullish, you're seeing those yields creep up. You weren't really seeing a lot of demand for bonds, but now our CPI readings and stuff have come down a little bit. You're seeing a little bit like a softer stance here from the Fed. In my opinion, I think Powell just kind of punted. He's like a senior, I'm out, but you guys can fix the mess. So I think that's kind of what you're seeing back here. But now that the yield's kind of been dropping, I think that you're getting a lot of demand for bonds, and that's pushing the yield down. I also think it's like now you're starting to see liquidity flows into these more I guess older sort of defensive positions. So the TMB trade that was looking more attractive, like last month, kind of changes the tune a little bit. But it's like, for example, it doesn't move all that much. So I mean, I don't like, again, going forward, I don't think I'll probably trade it in the fund much, but it swung at like a couple $100. So it's not too bad, but it should still find some sort of support. It kind of looks like there's maybe like a 5-way developing here. If it made a new low, I wouldn't be surprised, but it shouldn't really be below 4%. Just in general, it's like that to me would be kind of like a discount, because we're still not out of the woods with any sort of inflation yet. And quite frankly, I think that some of the numbers are being cooked as well. But it is what it is. So that's what I think is going on with the yield here and some of the bonds. We haven't really heard much out of the Bank of Japan lately, but for now, I think it's probably safe to say that if the yields head down a lot faster, then you can probably assume that demand for bonds is taken off pretty quickly, and that typically means you'll probably see some sort of larger reversal soon. Gold, I think gold here is due for probably another little push higher, like 5146 is this retracement here, the 618. And then also, I mean, this is a pretty clear, like, normally, bullish sort of signal. Somebody say something? Silver is also kind of doing the same thing. It's kind of consolidating. It's really kind of hugging this 50 DMA. That's the purple line here, and I still think it'll probably break above. Maybe you'll see some pattern expansion. You guys have heard me say this a lot. I believe in symmetry a lot with a lot of these longer term, or the longer term the chart is, the more symmetrical you'll see a lot of these patterns, like head and shoulders or like flags or pennants, stuff like that. Because typically you don't see like really, really tight patterns that hold on for long, especially when there's like a widely traded asset, like something like silver. Almost nobody heard of silver as something you could trade, until probably like 6 months ago. And now everybody trades it, but still, Don and I were in there first.
Well,
I'm sticking to my guns on that one. Anyways, I like to think I'm cooler than I actually am.
it's hard to trade. They just created a smaller contract.
Oh yeah, that's right.
I mean, when I started trading the futures, it was 2,600, and now it's 26,000 for the same thing.
Yeah. Yeah, it's funny. I was looking at. I'm like, oh, maybe I'll trade some silver today, and I try to go in there and look at the futures contracts, and then I didn't even look at what the margin requirement was. I just clicked buy, and it's like, do not have enough funds. I'm like, what? like this is weird. And I'm like, oh yeah, okay, so that makes sense now. So I just did some calls in SLV. It's all right. All right, so yeah, just metals in general, I think, are just kind of puttering around. There's a lot of just in general, like consolidation, or just a lot of uncertainty. I think people trying to bid the market up that were kind of trapped up here, increase cost basis, that kind of thing. But I do think that they're kind of like mid correction here.
I think it's interesting that you would have thought that this would have crashed even more than it did with the way that they jacked up the margins.
Yes, I would hate to be a market maker for silver. Those guys were, yeah, I can't remember what the figure was, but like 6 months ago, before silver even broke out, they were massively short silver because everybody was long metals. So, I mean, I don't want to be in that conference room. So yeah, so I think metals are kind of like in a holding pattern here, and if you remember, I guess being a student of market history or just history in general, like it rhymes, doesn't repeat, but it rhymes, and like even in major crashes, you see like 3 or 4 weeks worth of counter trend, dead cat bounce, or whatever they call it, bear market rally, that kind of thing. So there's a lot of that, a lot of that stuff kind of going on in here, and I think that's kind of what we're seeing here. Like silver, I mean, it was down 30% that one day. That's a lot. That's a lot, guys. So
even the 29 crash, it recovered like half of it.
Yeah, that's right. Yeah, that's right. In the November, December, it recovered about 50%. Yep.
Yeah.
But then it kind of just, there was like that wave 3 where it's just that constant selling and over like a year and a half.
It was the next wave down that was the killer.
Yep. So, and if you guys remember, a lot of when I talk about this stuff, like, the first wave down is always the hardest to forecast, but that doesn't necessarily mean that, like once you do see a pivot from the bottom, you can't make a more intelligent forecast about what the next wave is going to do. And that's really what, I've been struggling with here, is that, like, the market's been doing a lot of fake outs lately over the last year and a half, like a lot of, we're just about ready to turn. And then some, magical Cape Crusader comes in with a big old bucket full of money and buys up the market and saves the day, snatches victory from the jaws of defeat. And, I mean, do you guys know that that the Fed has trading arms, by the way? They have they have teams that do trading, and I have a sneaking suspicion. I have a sneaking suspicion that these reverse repo agreements and like these guys holding, these guys paying points for banks to store their extra cash there, I think that's being used as liquidity in the markets. I think, I mean, yeah, it's definitely against, guiding principles of the Fed, but I think that I have no proof. I have no proof. However, don't you find it weird that sometimes when the market should crash, it doesn't? There's been 3 times over the last probably 2 years where, I've been sitting with my face 3 inches from the screen, watching things melt down. Then all of a sudden, just like an infinite money cheat gets activated, and buy anything.exe gets activated, and then and then there you go. Dip has been canceled, or crash has been canceled. Let's keep the party rolling. So like, in my opinion, like, even deep-pocketed institutions can't deploy that amount of capital that fast. They don't have $10 billion in cash sitting in a bank account. Like they have to have, like, that's that's why there's like capital inflows and capital outflows. These are controlled sort of things. Like the DTC controls a lot of these cash flows. They control a lot of these just general movements of money flows, because you got to think, like, we have anti-terrorism laws. We have like any transaction over $10,000, you have to submit a CTR report to the Fed, or not the Fed, to the DTC, to essentially log the transaction to make sure you're not funding terrorism. Now I think it's $1,000. It used to be 10,000 was the threshold, but now, since everything's getting a lot more automated, the threshold is lower for that. So if you think about it, like, if you want to, even if you have $10 billion and you want to use it precisely at this 1 second to buy this one dip, how can you do that? Like, it's very, very difficult, in my opinion, to execute. So I think that if you have a infinite bucket of money through bank reserves that you've paid some points to hold on to for a while, why are they paying points on it? How are they, like, that? You're just losing money. It's just a losing proposition. So in my opinion, it's just liquidity. So when you have a lack of liquidity, that's what creates those crash environments, and crashes are bad for the economy. So, like, 1929, the Fed did the same sort of thing. Like, they tried to raise the rates in order to kind of throttle back the economy, because they didn't have the amount of liquidity that they could do it. Like, if something dipped, they could buy it up and kind of create like a soft landing. But I just think that there's again, I'm not a conspiracy guy. Okay, I think that people are not smart enough to run a conspiracy. Like, anything more than 2 or 3 people, your ass gonna get caught. So I think that just everybody in cahoots thing is not really a thing. I think it's just you don't know what you don't know, and you don't know what, like, if people don't tell you that this is how it works, then but I think that there are certainly emergency measures in place, where if you have huge liquidity drains out of the market, like in 2008 with Bear Stearns, that was a day where you needed hundreds of billions of dollars worth of liquidity to keep the market from actually, like, exploding, just because all that stuff was leveraged. And I think that that's what they actually have right now, just through everybody's collective deposits that are stored with DTC and then also with the Fed. Again, I have no proof. I don't have a whole book of answers in front of me, but I kind of, once you've been doing this for a while, you're kind of like, what? Like, this is weird. Like, I don't see any dark pool transactions of more than $1 billion, and it'll cost you at least $1 billion to trade a 1% market. So where's the money coming from? Anyways, I got off my high horse on that, but I think that that's also kind of what's been driving a lot of these, like, Caped Crusader moments, where you're staring at the chart, you're like, oh man, this is bad, and then all of a sudden you get a tweet, it's a good time to buy, something like that, and then there's all the liquidity, bam, there it goes, right back into the system, and then stock market crash has been canceled for the next 10 months. So anyways, so that's so I think, though, that sometimes, like, once you dump a bunch of liquidity in, you got to get it out sometimes. So I think now that the Fed has these programs that remove liquidity from the system, not reverse repo, they have these other programs. So, like, we're not going to buy any more assets. It's like, we're not going to take any more positions and equities, and, like, they're telling you they're telling you they're doing it. It's just, when they're going to sell assets, then they know that something like that, they need to provide liquidity to the market, but it's usually in an uptrend. So they've been accumulating these assets for a while. And my opinion is that they've been accumulating all these $7 trillion worth of assets because they've been buying every damn dip, every big dip that's been going on to keep the market from from hitting the crater. So all right, I'll probably be wrong about that too. I don't know, but I suspect since of this
Probably
speculators
not.
market. Speculators market. I see. I got you thinking, Ben.
I like these conspiracy trades. Yeah.
Conspiracy trades, nice. Yeah, we should set up an ETF or maybe a coin or something.
Conspiracy ideas.
Yeah, we'll call it a Conspiracoin or something. Yeah. We'll keep all of it for ourselves. We will pump and dump scheme. It'll be fine. No, we won't get caught. There's nobody who works at the SEC anymore.
Yeah, well, they're in cahoots with everything too,
Yeah, right. We'll
I
investigate that guy, but not
My
that
daughter
guy.
just gave me, I just finished it, this book from like 14 years ago called Flash Boys.
Oh,
Flash Boys, yeah.
Yeah.
Unbelievable,
Yeah.
this stuff.
Yeah, crazy. All right, sorry. I digress. It's getting a little late here. Sorry, guys. I know it's dinner time for you. All right, so oil. So yes, we do have an overbought indicator for the RSI, but sometimes it doesn't really matter if there's like geopolitical conflicts. I mean, the last time that this happened, literally the last time that we bombed Iran was, and I say that tongue in cheek. We got these. When was that? That was back in June, wasn't it?
I can't even remember that. Yeah.
October, maybe. No, couldn't be. It was right around here.
Yeah, June.
June
2025.
June. Yeah. Okay. So you see, we had this, and you could kind of see it. Like remember, like 2 or 3 days beforehand, you started to see a lot of buying in oil, and we're seeing that right now. So I think that before, if you kind of zoom in here, I think what was this, like the day or two beforehand, you had a big high reading on the RSI. You had a tiny bit of pullback just because it hit 200 DMA. Like it's going to happen. There's always big buyers, big sellers at the 200 DMAs. But still, it just rocketed right past it, and yeah, it was elevated. But this is also just due to geopolitical conflict, and we saw this big. Let me see what kind of move that was. I mean, that's a huge move. It was 15%, and if you have a leverage ETF, it's even more. So that was just one day, and that was just one bombing run kind of thing. Like if you have like a protracted conflict, then I don't think it will be so fast this time around. I think there's enough military assets that have been relocated to the region that they're preparing for a longer sort of protracted sort of regime change kind of thing. So that's just my thoughts on the matter. I think that, yeah, we do have some elevated RSI, but we're also hitting a 50% retrace level here. So it also doubles as like the bull target one. But I also think here that like you still have a lot of potential resistance up here, but look at all the buying down here. This is wild. Like to me, this is somebody, somebody's either getting concerned about something or somebody wants to play the momentum trade. So I think, kind of, Ben, where did you say that you bought in?
It was around the open this morning. I forget the exact
Okay.
price.
I mean, you don't need to tell me exactly. I was just curious because like, if you bought like at the top around here, I'd say like, well, maybe there might be like a little bit of a pullback or something before, it could potentially, make a back test. Like a,
I mean, I also used UCO, so it's a little.
Oh yeah.
Yeah.
Sure. Okay. Yeah, I have a bunch of
UCO. Futures are too crazy for me.
Oh yeah.
I have a day job. I can't be doing it.
It would be turbo broke.
Oh my god. Yeah.
Yeah, especially because oil hasn't done anything. If anything, futures would be easy to trade with oil. When it wasn't a couple days ago. Like it's just been doing nothing but grind. But like leverage ETFs, when you have a bigger move, that's when you get the the nice returns on those. So one last thing I'll say here about oil is it's actually a little bit difficult to measure because again, like anything that has like pretty high frequency contract rolls, it's a little bit difficult to keep keep a good pulse on it. But if you have kind of like this sort of like a B wave, I guess you could say, on the way back up, and I'll mark it here just so it's easy to see. Yeah, so like on the way up here, this is kind of why I'm choosing this. But on the way up, I'm thinking this is like the termination of your A wave, and then this is like a B wave sort of launch point. You could also say it's like a bull pennant. So if we do have major conflict, me personally, like I don't think I'd be so quick to close close shares like that, because you might have a pretty nice move up. And again, like I don't want to. I know this always kind of bites me in the ass when I say it, but when you do have a breakout like this, like if you get a lot of momentum, I mean, a breakout would take you, it could take you like all the way to the top of this long-term range. And even then you could probably break out of it, because this is just a, standard sort of, declining wedge, whatever you want to call it. And I think this is also just another longer term ending pattern. Oil itself, like if you are going to have some sort of recessionary environment, it's not really going to last long at highs, just because people will drive less. They don't have money for that stuff. But also take a look and watch how gasoline reacts. So like gasoline demand will just be down in general, but like watch how the two are correlated. I don't know what kind of like charting tool or whatever you might have, but you can always just do like a comparison, like add in gasoline, and you can watch how it tracks. Because sometimes you get like some of that like arbitrage there, where you might have oil that kind of ascends to the heavens, but if gasoline isn't really tracking with price, then typically that'll just mean like it's just a quick run, and it'll probably snap back to the mean pretty quickly. So I would say just keep an eye on it. Like all the buying is good if you're long, and there's a lot of accumulation. So I would say hopefully didn't like bet the farm, because if there's a little bit of pullback and some support, then that'd be a good place to add.
It was sort of a starter size position, I suppose. I forget exactly, like one unit, maybe you wanted to add, not more than two.
Okay. Yeah. Okay. Cool. So hopefully that's helpful. Again, we don't know what's going to happen. So, but what we can do is try to stack the probability in our favor. And I think that the probability in this case is, at least tension is going to generate some sort of positive inflows for oil. Even if there's no military action, like there's still going to be some tension. And I think that at minimum, you could see a run up here to like 67, 60. And if it does reverse there, then you could probably make the argument that you'll see maybe like a quick pullback, like a B wave, and then it'll probably rise up to the top like that. That actually kind of fits from a symmetry perspective. So yeah, that's kind of my thoughts there in oil. And I got to pick up the pace here. So natural gas is this one's also kind of making a flag. I think it's actually like a back test of this last little breakout zone back where it gapped up. So I mean, I only have one unit. I'll probably add another, but you can also kind of see that this volume here is declining in kind of a scooped way. So that to me kind of means accumulation. And as Don mentioned before, that we're expecting some colder weather. I mean, it's it's freezing up where I'm living right now. I'm in Arizona. Never happens around here. But there's been a lot of demand for gas. So we'll see what happens there.
Interesting.
Stocks. This one, I think.
I mean, New England now, it's actually been kind of like I live in Cambridge. It's actually been warm. Like I have like the window open in my office.
Really?
It's crazy.
Nice.
Yeah.
Okay. Cool.
I mean, I guess unless you're holding natural gas, which I am, I'd rather close the window and be making money. But yeah.
Yeah, and another thing too is gas. Gas is like it's had somebody's had their boot on gas for a while. It's just like it had the worst September like ever for natural gas for its typically seasonal ascent. And then also too, it's been a little bit muted here, but I know that it's a big moneymaker for Russia. There's negotiations, blah blah blah. But you also see a lot of these like B waves, sort of quick pullbacks and stuff. I think that the sellers, I mean, they're really running out of volume for a while, and now you're starting to see some buyers pick up the ball and run with it. So we'll see what happens. But that one I'm a little less confident in. I'd say oil is probably the strongest one. Let's see here, stocks. So this one here, I think it's just kind of it's making that double top. unless you see a continuation up, and I just can't see it right now. There's no real the AI trade's getting beat up, and SOX is just a big old bucket of semiconductor stocks. So I mean, but to be fair, it's gone nuclear since for a long time here. So getting some gas left out of that, I think is probably realistic here. Even though I did add SOX closer to the top, I think that if you do see a bit of a run up again, like maybe 375 is probably a good stopping point if it's because it kind of looks like a 5-wave here. All right, Bitcoin. I think is I think it's just kind of puttering around here. Like I think it already made its big move. I still think that we'll probably see lower lows, but this to me looks like a pretty classic consolidation or continuation pattern. I think that like Bitcoin's not exactly like the best store of value, but it's still like an alternative asset class. And now that it's been consolidating for a while, what I would look for is look for crypto to become more popular in the news if equity starts to sell off. Because think about it like you got to sell something to somebody to get liquidity. And if you want to drive up the market, you don't want to foot the whole bill for it. So you need to have market participants to flood on in there. So Ben, you're talking about having some challenges in crypto last week. Well, I mean those challenges are still there, but what I'm seeing, at least from my my vantage point here, is that there is accumulation down here. Even though there's been a lot of selling, I think it's either profit taking or just general like this is what was supposed to happen to equities instead it happened to crypto. So I think that if you do see a rotation here, I think crypto is probably going to benefit crypto and metals, but I think also metals need to sell off a little bit more for it to become a more attractive trade. Because I think retail got it. Retail got their asses handed to them with silver. So I think the same thing with Bitcoin. Like it's a lot more popular trade with the younger retail trader crowd. So I think even if we get this last little leg down, you should still see some sort of wave 4 up here to like this this about 75,000 region. All right, Nvidia. This one is just putzing around. I think this is just straight up distribution, waiting for those earnings. I don't think the market will do anything crazy until they have earnings, but you never know. I think we could have earnings could also be used as a catalyst for like a B wave if we do sell off a lot or something. So it's just something to keep in mind. Tesla, this one's just kind of been slowly bleeding. I do think it's made its 5th wave top higher up, and now I think it's just kind of sell off a little bit more and then maybe trade sideways for some time here. MSTR, this one is going to follow the exact same path as Bitcoin. I think you'll probably get up to about 150 if everything goes well. If not, so like you could still make an ending diagonal from this sort of move. Like you could still see something like this and then a big return skyward. But there's a lot of sell delta up here. I don't really know if it's going to be a surmountable thing, especially if crypto keeps selling off. But if it does rally and rally in a big way, I think you'll see a lot of price appreciation with these companies again. But yeah, any questions or comments? Anything I didn't cover? Anything I talked way too fast over?
No, this was really great.
Well, you guys are all experts now.
I do kind of like this single stock idea and strategies around that. I've always been more heavily in like the leveraged index ETFs and like lately it's just like a gut feeling that I'm just playing Russian roulette with these things. Like if I don't get it directionally right, like I'm not going to blow up my account. Like they're not futures, but like I could definitely do some real damage. And
absolutely.
Holding them is feeling like it's more and more uncomfortable. And so, yeah, your ideas now are just kind of like music to my ears at the moment.
Good. So I think probably what I'll do is I'll probably like separate the ETF side of the portfolio and like just wind down trades and stuff. But I'll probably put a lot more capital in like the single stock ones, and then I'll also try to like redeclare or like, put out a note to everybody in the, everybody in the team here and just say, here's kind of what's going on. I actually talked to Alex today about it, about like just, in general, like pivoting some stuff. And, again, I think it's really just kind of boils down to, I think people are struggling with the leverage ETFs and like knowing when to hedge and, having different risk tolerances. There's a lot of variables there where if it's a single stock, you can at least like, and I love to teach too. So I think it's cool to also talk about what the company does, like teach people about fundamentals, like how they can do their own sort of research, and it's to me, it's a more like stable sort of investing, investing sort of thing where you could still make a ton of money if you buy stocks at a dip in the chart. And, if you buy, sell puts or, covered calls or something like that, like that's a great way to make income. And like I said, if you're retired or you're going to be soon to retire, like you don't want to be gambling on, leverage unless you are comfortable with it or know how to do it. And I think that just, the majority of people who sign up for stuff like this are more like, teach me how to be better at this. Like teach me how to do it myself, but I still want to, I still got to learn, and you got to have a margin for error for that. And I just feel bad that like we're not getting enough traction on it. And also too, the market hasn't really been going the way that most people have expected. But I've had a lot of good friends that have been trapped short already too. Good, real smart people. But it is what it is. It's a bubble, right? So it only comes around every 20, 30 some years, right? But you just happen to get caught in it. You're like, man. But yeah. So I guess suffice to say here that there are a lot of deals out there with some sectors, some stocks in similar sectors, and they're not necessarily fast movers, but they are income generators. So if you want to use like, I think a good, I can't give advice, but I think a really good thing to focus on is like let's say half of your portfolio in stocks that, like for me, like my 401k stuff, like I will have stocks that, give me great dividends. I'll usually like reinvest it in the shares at lower prices if it goes lower. And then I'll just keep like increasing cost basis and holding on to it, especially if I bought it at like a low price, on the chart. A good example is like UAME. So UAME, like all of a sudden it just exploded one day and then took profits at like $13 a share or whatever when you got into like 5 something. And then I've been resetting ever since it got like chopped in half after that. But I think it's going to still like kind of, make a swoop and go back up. But it's like, you can buy and sell at typical chart reversals and support points and still make a killing on single stocks. It's just there's no leverage, so it doesn't move as fast. And I think it's a lot easier for people that like work all day where it's like, well, I can't be in front of a monitor all day. So, so I think that'll be helpful.
And I kind of find that's what happens with me, like with the leverage ETFs again, like TQQQ, like I'll have every intent of like, oh, now it's time to hedge with like some percentage or maybe 1-to-1 with like SQQQ, but then like I have to work all day and I forget and I can't get to it, and I end up just like always kind of net long. There's been a few times where maybe I actually hedged and it was fine, but then I'll like leave it on too long for the same reason. And like to your point, it's like if you work all day and I'm checking this like maybe every 90 minutes, couple hours, and even that's pretty good. It's just tough to use those types of instruments when that's like tempo at which you can be checking it.
Yeah, I agree. And I'd say that the biggest thing I've learned over the last 2 years is like,
I kind of learned that the hard way.
I think I've also learned it the hard way too. Like I used to have my own portfolio, like I didn't have to publish anything, so I could just let it ride and let it roll and like keep adding and stuff like. And it's my own risk tolerance. Like I'm sure we've all got some trade skeletons in the closet where you've kept adding or just done some very, very poorly timed things, and you just won't tell anybody about those. But like when you do something in public, you have to make sure that people understand what you're doing and why you're doing it, and like the logic behind it, because if the logic is faulty, then you at least get a chance to question it yourself. But if you don't know what's the right question to ask, it's get philosophical at that point. But it's more of like if you don't know what to do, it's always going to come back and bite you. And this is the most difficult game in the world to play. So I think it's just one thing that I'm trying to be more protective of the people that trust me to kind of talk through the markets and stuff every day. And so hopefully hopefully that'll be a positive change, and we'll see some stuff. Because like I didn't do like, I actually didn't roll over my 25 to 26 tracker yet. I just haven't had the time. But the single stock side, I think it was like 50% return last year. Did pretty well with the quantum stocks. Yeah.
Yeah, I just not have a 50% return last year. That is for sure.
Yeah.
I was like one monster day, but other than that, like, yeah, I really struggled with timing the ETFs, and like, it was tough, but it was definitely like a lesson learned year, because I should have done much better had I been paying attention and kind of like more following along with what you were doing. But it's just hard sometimes. Work gets crazy. You get distracted. Yeah. So those,
Absolutely.
I'm realizing those are maybe not the best things to use as like my primary investment vehicles.
Yes. Yeah, and it's more speculative in nature anyways. So it's so I think that's the path we're going to go down here. And I think there's again, there's lots of deals, lots of good stuff. And like Don was saying before, he was asking about like hedging scenarios, like why can't you just like buy a put, like instead of tying up all that capital? And the answer is, well, you can absolutely do that. So it's like, I mean, there's easier ways to do it, and it's you try something. I'm a big fan of like fail fast. So like you try something, it doesn't work. People getting chopped up. They're like, okay, well, this is not the right way to do this. Let's pivot. So that's that. Any other questions, guys, or anything yet? All right. Well, yeah, I appreciate the flexibility on the time. By the way, there's some crazy winds here yesterday, or the day. Crazy winds yesterday. I was a little bit worried about my trees, but yeah, we don't get crazy weather like that too often. But I was, power's going on and off, and I'm like, whatever. So yeah, so send me a DM or anything like that if you have any questions. I'm going to post this whenever it's done processing. But yeah, so hopefully we get some sort of clear direction. But overall, it's it's kind of getting a little weird with the market. It's getting a little spooky with the price action. So be careful out there, guys.
Great.
Thank you.
All right, have a great night.
Thanks,
Yeah.
James. Take care.
Yeah, stop the recording. Here we go.